Happy Monday, traders, and welcome to a fresh week in markets. So last Friday in the US we had some very important economic data that came out, and that was the first non-farm payrolls, the first employment number for the year. So that's the NFP for December numbers. Market was expecting plus 60,000 on the headline number, and the unemployment rate to go from 4.6 marginally down to 4.5%. Now the headline number came out at plus 50,000 new jobs were added, so that was about 10,000 less than expected, but not a big miss. But the unemployment rate unexpectedly fell from 4.6% down to 4.4%. We did get some revisions to the prior month's October. That was actually revised down 60,000, while the November number was revised down about 10,000. So look, there was a couple of negatives in the number, especially obviously in the headline number and the revisions, but the unemployment rate did go down. And that has obviously been a huge focus for not only the Fed but the market, that unemployment rate was going the wrong way. Now it's going back the right way. How did the markets react to that? So we look at the US bond market, US 2-year yields. They were trading sub 3.5% before the number came out, around about 3.48, and they closed up about 5-6 basis points to close at 3.54%. So US bond yields did exactly what you'd expect. They did go up, not a huge move though. Fed fund futures, if we have a look at what's priced now for January, look, market wasn't expecting a rate cut in January, so they're only expecting about a 10% probability. That's gone down to almost zero now, just around about less than 5%. So look, this January meeting, 100% market is not expecting anything. The next meeting though is in March. Before the number came out, market was almost a coin flip whether or not they get a rate cut. So like about a 40% probability. After the number, that has gone down to below 30%, around about 27% probability of a rate cut. So markets maybe not even expecting now a rate cut in the March meeting. So it looks as if the market is not expecting any rate cuts from the Fed anytime soon to start the year post that employment number. For the simple reason is that obviously we got those rate cuts last year because unemployment was spiking up. So now that looks like we've seen potentially the worst in the employment market for the time being. So how do markets react? Currency markets did exactly what currency markets generally do when you see a strong employment number and a marginal spike in bond yields. So we saw the US dollar stronger across the board. Dollar index was up about 0.3, so not huge moves, but still US dollar did move higher. The currency pair that moved the most is dollar yen. That spiked up almost 4%. That's now trading back above 158. So these are back at multi-month highs, super elevated levels, close to 160, and then also close to those 40-year highs above 160. So yes, dollar yen obviously did like that better payrolls number. So yes, moving forward at the moment, I'd imagine that if rate cuts are off the table, US dollar should continue to get some strength from that. Equity markets, the employment market is a litmus test for the health of the economy. The fact that we're not getting an unemployment rate going up towards 5% and sort of red flag for recession and going back in a healthy way. Equity markets cheered that. So we've got S&P and NASDAQ closed positive. S&P was up about 0.6, NASDAQ up 1%. But S&P was a new daily record high. It was a weekly record high on Friday. So US equities have had a very strong week to start the year, pretty much taking off from where they left off last year. And yes, we are still in a obviously raging bull market for equities. Precious metals though, generally when you see bond yields up and you see US dollar up, that normally weighs on precious metals, and normally you see gold lower, and on payroll sometimes it can be a lot lower when that happens. That did not happen. We did see gold close above 4,500, above big psychological level, and silver closed pretty much on $80. So they both had positive sessions. The silver was up about 3.5%. So we'll talk about equities being in the bull market, precious metals ignoring everything, don't care. That is an absolute raging bull market. Anyway, on the weekend we got a lot of geopolitical news, a lot of headlines, a lot of rumours, and a lot of interviews with Trump regarding Greenland. It seems as if he is super serious about taking Greenland, whether it's going to be the easy way or the hard way. There's even talk that Trump has even briefed his Security Council about how to invade Greenland with military. So look, this sort of geopolitical news obviously is super positive. Things like gold, safe haven, which loves that sort of stuff. Also, a lot of news that potentially, Trump went into Venezuela. One of Venezuela's allies is Cuba, and potentially Cuba's the next cab off the rank. So again, more geopolitical news there. And then finally, what's been happening in Iran. There's been huge uprising by the people, the population against the Iranian regime, protests in the streets. One of the things that Trump has basically said is that if the regime does basically fire back or kill any of these protesters, they'll be held to pay. It seems as if to some extent that has happened. Trump obviously is not going to signal right before he does something, but I would not be surprised if you wake up and Trump has actually striked Iran. Obviously, it's been on the list for a long time, and obviously Israel wants it badly as well. So, look, a lot of geopolitical news out there at the moment, and that is a massive positive for gold. So, I would not be fading any of these moves in gold. Gold could still do something violent on the back of these geopolitical risks. Okay, moving along. This is a pretty stacked week with some pretty important economic data. Look, today, Monday, firstly, Japan is out. There's a market holiday there, so it could start quiet in Asia. But Tuesday, we do get US monthly CPI data. So light payrolls, this is obviously the top tier US economic data. Markets expecting for the headline year on year and also the core to come in at 2.7%. Obviously that is not near 2%, which is the Fed's mandate, so still sticky inflation. Look, number comes out above expectations, obviously not good. Comes out below 2.7, okay, that's going to be good. But no doubt, look, that is obviously going to be a huge focus for the market, and potentially, we're obviously going to get some volatility out of that. Then the following day, we get US retail sales. US is a consumer-led economy, so it's a health check on how good the economy is. Market is expecting 0.4% there. And then after retail sales, we get US PPI, so another look on the producer side of inflation. Thursday locally, we do get here in Australia Aussie employment data. So yes, we've got some very important economic data that comes out this week. Finally, another risk event that could come on Wednesday is that on Wednesday the US Supreme Court does have a decision pending that could be tariff related, whether or not Trump's tariffs are legal or not. And it's something the market is certainly sweating over. We get those headlines, no doubt we're going to see some action. So just be aware on Wednesday, potentially there is a risk event there as well. Anyway, good luck with your trades. The year's certainly starting to fire up now. We'll check back in with you shortly.